Welcome to Flirting with a Fish. Today, we are going to talk about a word that is really spoken more in negative news, more in terms of an unfamiliar space. But our guest today, Jason Fernandes, has been at it for several years and is very, very renowned, is an expert in the space of, guess what? Cryptocurrency, blockchain, Web3. Yes. So for somebody to not just stick around, but also do well and have the respect, there has to be something that they're doing right. And that's exactly what I'm excited about to speak with Jason for. So allow me to welcome Jason Fernandes. Hey, Jason, welcome on board. Thank you for joining me here.
Hi, Sonia. Thank you so much for having me. I'm really excited to get this discussion.
Before we get into the introductions, I want for the help of our audience, let's connect what we know with what we don't know immediately. So first question to you. What sort of traditional businesses are coming onto blockchain?
One of the traditional businesses that I think is a really good use case for blockchain is factoring. So there are factoring, invoice factoring, right? So there's a lot of companies that are, let's say, have temporary business costs. So for example, let's say a coconut oil company that, let's say, distributes to some of these major retailers, and then now there's like a lead time between their credit and with the amount of time that they get paid. Well, a lot of these small businesses, that lead time is too much, but for them to actually be successful. So what invoice factoring allows you to do is for people to buy a piece of their debt, their temporary debt, and then get a little percentage of that back when that comes out. So you can buy that debt. Crypto has made that much easier to do. I spoke with a company called Zot.io. The founder is Pritham, known him for a few years, the other day on our show. And he was saying that their company also does this. So it allows sort of like small businesses to sort of use invoice factoring as a way to sort of shore up short-term capital. Because again, banks are not likely to lend to them. So that's one like really good use case, I think, for crypto. I think there's another like NFTs, for example. Like I was speaking with a project that was using NFTs and essentially as tickets, right? So NFT tickets, I think is really a good use case because like there's a huge problem with people sort of stealing, what's known as sniping, essentially buying a whole bunch of concert tickets, let's say of Taylor Swift, and then reselling it, like for much more money. Yeah. So this is a huge problem, like in the entertainment business, where like it's everything scalping, right? Like you can't get very rarely can you now go on to Ticketmaster and then buy a ticket. It's because there's a million bots over there. There's a million like other people that are going to buy the ticket and then just resell it. So a Taylor Swift ticket that might officially cost only $50, you have to be $500 if you're a fan if you want to buy it, right? Well, with NFT tickets, you can ensure that ticket cannot be sold, or if it gets sold, you get a percentage back to the founder, the owner of the ticket, for example. Or you can make all sorts of like rules around that NFT ticket, so you can ensure that that people are not ripped off to look at their entertainment. There's a lot of these sort of like pay to look at ads, for example, products. There's a few companies where you can like pay to receive ads. And the reason that like that model really doesn't work so far is because people are looking at like they'll look at such a small amount of ads, and then the amount of money that needs to be transferred is so tiny that they have to look at a lot of ads. They have to do it over a lot of time before they're able to get anything, because micropayments are not a thing when it comes to fiat, but it is a thing when it comes to crypto. So for example, you can ensure people are paid micropayments for little tiny tasks and things that they might be able to do because it's so much cheaper to move money. So I think another good way is when it's much cheaper to move money, you can move of value for that matter. Cryptocurrency tends to be a really good use case, right? So that's another reason. Another use case is sort of when you have a two-sided marketplace where like Amazon has sellers and then you have buyers, and if you're bringing these buyers and sellers together, if you have a token that's basically moving back and forth within this ecosystem a lot, that goes for a very healthy token. because that means that the liquidity for that token is really high. The volume of transactions for that token is really high. And that basically signifies a healthy token when the token is listed. So these things are like really good use cases for crypto and blockchain, I think.
Wow. I didn't even know that so much has already happened from the traditional market space to Web3. Excellent. So I was wondering, are there some countries which are supporting the whole blockchain technology and the approach more than the others? And if yes, then is India one of those? My information, of course, says that India is not yet positive on that. But what's the latest? And which are the countries which are supporting the whole movement much more?
Yeah, so India has not really proved to be a really a good market, particularly because regulation has taken a long time to catch up. I'm not sure where regulation is now, but I remember I used to head a crypto exchange in India, and what used to constantly happen. Well, it wasn't in India; it was international. But what used to constantly happen is our on ramps, our off ramps used to keep going down. It's massively frustrating, and so if you're trying to grow business from a particular country and you're not able to process funds in the currency of the fiat currency of that country, then you're not able to do anything, right? And so this was a constant problem for crypto exchanges. The on ramps, off ramps kept going down. Now they have I believe a new I think a money laundering government body that crypto companies have to be registered with. So now slowly, I think cryptocurrency exchanges are coming back. But I still think that the overall thing is way too punitive for people to really foster innovation, right? Like in my opinion. So I think you see a lot of crypto people, they'll move to Dubai. Also, it's safer there, right? So there've been cases, for example, when you're an individual who is likely to have crypto or Bitcoin. So, for example, there was a list of the cryptocurrency exchanges gave authorities about who the crypto holders were for tax purposes. Well, that list was leaked to certain rogue police officers, and the story was that some of them actually kidnapped somebody and forced him to over like multiple hours of torture to hand over their crypto, and they knew he had crypto because they
had a list.
They had disclosed it, right? And I think the same thing is true for like say founders of companies. So if I'm a director of a company like AdLunam and we raise however many million, it's already public information, right? Well, anybody would know that the director of the company would have access to those funds. So. So a situation like I described could happen to really anybody who's a founder of a crypto company, because it's clear who has the funds, and essentially, with enough torture, what are you going to do? I suppose is the question, right? So, so I guess places like Dubai are much safer in that regard.
How are they safe?
Well, I tell you, I have a friend called Evan. I have a friend, Evan Luthra. Whenever he travels in India, he always has security around him. He has to hire private security. When he's in Dubai, he doesn't need that. It's just safer.
Why?
Dubai is safer. It's safer over there. It just is.
For creators, YouTube and Spotify have been the game changers. They have developed a lot of value, but they're all centralized. If they were to be made on blockchain, decentralized, so that the maximum benefits actually go to the person who's creating the content and the community which is consuming that content, do you think that can actually be built on blockchain? And if yes, what would that take? What would it look like?
So honestly, there's a lot that I could say about that. It's a very, very complicated subject. It's first of all, it's very, very difficult to launch a new social media network, socialFi products. So if you could see, when Blue Sky launched, that hasn't really taken off, even though it's founded by Jack Dorsey. Clubhouse was popular for a little while. It's not anymore. So it becomes very, very, very difficult to build something with sustainability, and it ultimately comes down to where the people are. So until you can move a significant amount of people over to blockchain to where they're comfortable with it, you're not going to be able to. It's not going to be able to properly compete with these more traditional Web2 companies unless the niche topic is blockchain or crypto itself, because then those people are already familiar with the cryptocurrency space, and so it's much easier to put them into some sort of. So there are some socialFi projects in blockchain that are successful, but they're successful because they're targeting crypto people, not the broader swath of people, right? So that's sort of. But I think that there is space for that, but you'll need to have a lot more adoption. Like people have to be a lot more familiar with crypto, and that's not happening. It's because the broader swath of people have to be familiar with it before those sort of business plans become more viable.
How do you see a lot of people coming on to Web3? I mean, of course, there are a lot of us onto what we call as Web2 or the internet that we know of right now. There's a lot of us. But how will a lot of us get to move to Web3? Because, with a personal experience, I could say that Malhar Film Festival is our festival. And so the last season, what we did was just so that we could create some awareness with the filmmaker community about blockchain, bring in the experts, help them get to understand, build a trust. We created an NFT entry ticket. And guess what? We loaded it with extra benefits so that, of course, people are more moved to even explore NFTs. And we had like a decent conversion, but like only about 10% of our community created their wallets. So it was just 10%. It was a big deal to get that going, but it was just 10%. It was not 10, 20, 30, 40%. So I wonder that what is actually going to take a lot of people to come on Web3, and would it be pretty much the same people that we have here on the internet? Or will it be some other kind of people altogether?
Yeah, so I think it's going to take a long time. I think that what's going to end up having to happen is maybe 2 or 3 large brands have something that everybody wants, and the only way they get it is via interacting with the Web3 ecosystem somehow. So, for example, NFTs, I think, are a huge sort of way for brands to like push mass adoption in crypto. So, for example, KFC, for example, could do promotions where they give NFTs to their subscribers, and that those NFTs entitle them to certain things to their users. Or what's the word? What do you call an NFT? A KFC user. KFC restaurant eater, they might be given NFTs and allowed them to get certain free meals or something. So other companies can also look at doing that. But I think it's going to take some of these major brands releasing NFTs or doing something in the Web3 space for people that. So for example, Nike shoes, right? Nike shoes. I don't know how far this is, but I remember there's some discussion about certain Nike shoes. You can track them on the blockchain. So for example, if they're sold, if they're faked, there's a huge problem with Nike with like fake shoes. If you're like a sneakerhead, you know what I'm talking about. But yeah, there are people that are like, faking shoes and stuff like that. And so now Nike is, I don't know again if it's implemented, but I've actually heard them, this being part of the discussion, that they're going to introduce an NFT, and then that NFT is going to track that particular shoe, and you can actually trace it on the blockchain. And I think something like that happening, where you have like a traditional brand meets somebody, like a motivated group of people, like sneakerheads that are interested in like making sure that they don't buy fake sneakers, for example, they might start getting used to the technology. And once that happens, I think you're going to start seeing more adoption. Rolex, I think, if I'm not mistaken, is also looking at doing this, where I think on recently, when I was at I bought a Rolex at a store, and I believe that they had an NFT on one of the an NFC chip rather, on something where you could tap it and you could check whether it's authentic or not. For example, it's on my receipt or something like that. But yeah, so that's one of the sort of use cases, and then maybe that goes on the blockchain, right? So.
Well, 2 years back, a lot of traditional companies did move in to the space of Web3, the metaverse and NFTs. A lot of people were exploring, and some of them did seem to have decent value propositions, isn't it? That's the time Malhar was going on, so we were in close contact, looking at the space closely. But then it all hit a wall. So, as an expert, what do you think really happened there?
Yeah, so I think what happened was, as crypto took a hit, the whole NFTs also took a hit. So I mean, you can just imagine NFT technologies which went public, like I said, on the Neo, we had the NFT ticker. Our ticker was just NFT. So you can just imagine, like, from being a massive boon initially to where NFTs became radioactive, the token, the ticker was like a radioactive ticker to have briefly, although now it's sort of made a comeback. But I think what comes down to it is that people aren't going to just get an NFT for no reason. There has to be some decent utility behind it. There has to be something that they're getting. And I think that's the problem, right? I think that a lot of these guys, so I think musicians that have released NFTs promising, backstage passes and this, that, those things actually haven't materialized. So there's one, in fact, if I'm not mistaken, I think it's Balenciaga or one of these really big brands that's actually being sued because they released an NFT that promised them certain like low costs and certain bags and certain other things. None of those things were actually delivered. So it was like a big brand that said, oh, you know what, let's try this NFT thing. Didn't expect it to cost them any money. Thought they could say anything, because it doesn't matter. It's just some publicity. Because again, you have to actually think about it, right? You can't just do it without thinking about it, without committing to following through on your product, on your promises, right? If you don't do that, you could be in big trouble. So Tiffany, I think, recently released some NFTs or something. But again, you have to like stick up and do what you say you will. Otherwise, people aren't going to buy your NFT. And this is happening to a lot of musicians. Like a lot of musicians that sold these NFTs saying, oh, you'll get backstage passes. They're not actually delivering it. And then they'll launch a new NFT because they think they want to make some other quick money, right? So it's not going to be successful. And this is happening also with Indian cricketers and stuff like that, in the NFT space in India, actors and so on. So I think that what people need to understand is that it's a technology, and it's a technology that represents value. It's not a technology by itself, right? So it's not a technology that's useful by itself. Like, you have to imbue it with value. So if you just put out an NFT and say, oh, hey, look, it's a pretty picture, download it, people aren't going to do it. Like, there has to be actual value attached.
That's not done. You can't do that.
Let's say hypothetically, you promise a pair of shoes that costs $1,000. You say, okay, if you have this NFT, it costs $200. Well, you have to deliver it for $200. Now that happens later. And then that's when the time the brand goes, hey, wait a second. Did we really commit to giving this out for, you know what I'm saying? Well, yeah, you did. That was what the NFT was. When you got all that free money, that was what that free money was for. So that's why it was such a hit, because people were getting good deals on things, but now you have to live up to those deals.
That's so silly. We dug our own graves. Anyways, so what about the concepts like earn to watch? Are they coming back? Have there been any success with it as yet?
Yeah, I think so. There's a company that I advise called Earn TV, which is exactly doing this, Earn to watch TV. It comes into a broader space of, being paid to watch an ad or to experience an ad. Like that's ultimately what Earn to watch is, right? Like there's usually an ad or there's something that's being marketed to that you're consuming. So I think that broader concept is definitely alive and well. Matter of fact, we are actually working on a product that will be working, that'll be attached, that be focusing on that specifically. It's already in beta stage right now. But yeah, I think that there's a lot of use case where you can transfer funds at a very low cost for people to do sort of like really tiny tasks or to experience ads and stuff like that. So that's something I think that we're, like, as a company, we're looking at very closely. But I think that there is a lot of place for that. Yeah.
Yeah, very exciting. Anyways, everyone is watching so much of video content and audio content, and they're spending their own precious time to do that. So if they can be paid for it, it will boost up the economies, and why not? It's a good utility. It must prosper. I'm all for it.
I think the key thing is data, right? It's like, what data are you willing to share? And the more data, like the more targeted the advertising is, the more valuable it is to the advertiser, excuse me. So it comes down to like sort of how much data are you sharing, and like if you're not sharing enough data or the advertiser doesn't have enough data, then they're not going to be able to pay enough for that ad. Right? Like you have different ad prices, and the more targeted it is, the higher that the advertiser is willing to pay. And the less targeted it is, the less they're still willing to pay, but much less, right? So if you're getting a percentage of much less, then that may not be economical or worth your time to do. However, if you're able to provide significant amounts of information, maybe you're like, the number of people in your family, your income level, and so on, then they can really target your interests. For example, they can really target the advertisements and make sure that they're reaching the relevant people, and that's basically priceless, right? So I think what's going to end up happening is I don't know if you're familiar with digital ID, but the whole idea of digital ID is you have sort of various pieces of information that maybe you want to share, maybe you don't. So maybe you have like this digital identity of yours, and part of it might be your passport, might be your social media, might be your dental records, might be your health records. So maybe you go to a doctor, you want to provide them your health records and your birth date, but not your passport and your dental records, right? So the idea of DID is being able to like really dial in the information that you're giving, but having like a unified ID. So I think there's a lot of area space for that as well.
Jason, about the financial sector, since being transparent and secure is the fundamental promise of blockchain. So are financial institutions seeing some use of blockchain technology into their process? Are people as consumers of the financial sector, are they asking for solutions via blockchain? What's happening there?
Yeah, so I think that there are a lot of companies that are looking at. So, for example, there's a lot of traditional banks that are partnered with crypto custody solutions to essentially allow their users to both hold fiat currency as well as cryptocurrency within their bank accounts, so they'll have separate crypto custody solutions. That way they can keep it safe. For example, I think that the traditional finance TradFi is quite nervous about blockchain, because if you think about like decentralized lending, for example, like that's a direct threat onto what banks basically make their money on, right? And so there is a lot of sort of resistance from more traditional finance companies to like get involved in blockchain, particularly because it might hurt their bottom line in the long term, because essentially what they are is a middleman. Banks are middlemen. They take deposits and then they give it out. Well, blockchain is designed to get rid of the middleman, right? So you can see that there's like sort of major philosophical problems between them.
How? Help us understand this in more detail, please.
Yeah, well, I mean, if blockchain is designed to cut out the middleman and to make systems more efficient, whereas with a bank, those inefficient systems have various different people that are getting paid on every level to make that happen, right? So, for example, a good example is the lending, right? So you can have a decentralized lending where you make a case to the open world, everybody puts in money, and they'll lend you the funds, and then when you give the money back, it goes to everybody, right? That completely takes the bank out of that equation. Normally, the bank isn't lending you its money; it's lending you other people's money. They're just a middleman. They're the ones who are holding the money. So if you don't need somebody to hold the money, or the money can be held by a quote unquote a smart contract, then what is a use case for a bank in that position? There's none, right? So when you see that that decentralized lending, but again, that's why the regulations around that are so onerous, because it's very, very, very difficult for a lot of decentralized lending platforms to exist. Because you need, when it connects to the traditional financial world, you need things like KYC and a bunch of other things, right? Which are necessary, which could a lot of people that are in crypto to disconnect from that financial system wouldn't want to be interacting with that, right? And there are people that do that. There are a lot of people that come to crypto from a libertarian perspective, where they believe in freedom and they don't want any government control, and so that's really the way they're accessing. It's almost like the people that went off grid. How do they get on a financial system that's not on grid, right? So it's almost the same sort of principle of people. But yeah, that's sort of what gets people excited.
Is crypto getting used for dark web? For all the illegal activities? I mean, that's what we hear, but please tell us.
Yeah, I'm sure it is. I'm sure that, I mean, really, it doesn't matter. Like, people will figure out ways to transfer value regardless of what the mode of transport is. And that can be used for any number of things. So, for example, if somebody, asks you to send them money via bank account and then doesn't pay you back, that's the same as if they would ask you to send you crypto but not pay you back. But the crypto one would be considered a crypto scam, even though really it's just a money scam, and it's just the value that has been chosen to be exchanged is that. Now, people talk a lot about the dark web, but Bitcoin is, particularly Bitcoin, is an incredibly terrible cryptocurrency to use if you don't want to be tracked. Bitcoin is very easily trackable. Most cryptocurrencies are easily trackable. Keep in mind, you have a blockchain where you can see all the transactions. They're all public. They're not hidden, right? So ultimately, there are companies like CipherTrace, and there's other ones too, but CipherTrace is a good example. At XRX, we used to be partnered with them. Essentially, they prevent things like money laundered funds and stuff from coming into the exchange. And what that is like, when you have a cryptocurrency exchange wallet, when you have a wallet, they know the wallets, for example, that are owned by like ISIS and terrorist organizations and Iran. And they can see, for example, if money goes in there, where it came from. And for example, at some point, if you follow the money, at some point that has to hit an off-ramp. An off-ramp is almost always an exchange, and that exchange has done KYC. So you have further details. Whenever that money comes off the internet, very, very rarely can these groups get funds off the internet without going through an exchange. And usually at that exchange process, they're KYC'd. So if you track funds long enough, you might see you'll see one wallet, let's say 2 or 3 wallets, let's say Al-Qaeda connected, and then all of them will be depositing funds into this one wallet where the guy is KYC. Well, then that guy is ISIS, right? That's how you figure that out. So that's how these companies will figure out where the funds are coming from. And CipherTrace, they work with the Indian government to help them trace funds as well. So they work with and these computer forensics companies work with multiple law enforcement agencies to provide them information on how funds are moved and stuff. So it's not private the way people think. It's actually fairly easily trackable. Like, in order to be quote unquote private, which it's practically impossible, and you would need a high degree of sophistication, technical sophistication, to be private, even using Bitcoin.
And so what is the role of exchanges in controlling frauds? Can they really do anything to stop these people who make errors, who are the scammers, from withdrawing money? I mean, these scammers are actually their customers, and technically they're withdrawing the money which is in their account. So can the exchange really do something about it?
They freeze accounts. They don't let money go in, basically.
Well, then there shouldn't be any issue at all. But there are. We all hear of leakages here and there. So why is that?
So it depends. Are you talking about money coming off of crypto or into crypto? Because there's 2 different places, right? Like, once you take the funds off, it has to come off through an exchange, generally speaking. Now, you could do private transfers, for example. For example, I could sell you USDT that I have, but again, that's not scalable on a large scale, right? Like, if you're a North Korean hacker and you've stolen like $20 million, you can't sell that individually to people like a few dollars at a time. So it's not scalable really for crime. And like, maybe here and there, you could maybe get away with a little bit, but probably the same is true for fiat, right, or cash.
Exactly.
But it's not scalable, and it's not an easy way to, like, if you're looking at crypto as an easy way to get out of taxes or paying regulations or something, it's probably not true.
Good to know that. Good. So are there any guardrails or the police stations like our own world to catch these thieves who don't keep their promises?
Yeah. Well, the regulatory agencies in those countries take it up. So I think in this case would have been maybe the Federal Communications Commission, because they probably made some statements about what they were going to do that they didn't end up doing. Maybe the Federal Trade Commission will probably be involved, FTC. So there's always, regulatory bodies that you can. It's the same as traditional companies. So fraud is still fraud. If they take your money, they say they're doing this thing, it's still illegal. So you see the FTX guy, he went to prison for a significant amount of time. These things happen. To a lot of people. Sam's a Facebook friend of mine, but he went away. A lot of people, go away like that if they do bad things. So and as it should be.
So it's the same as our world. If something goes wrong, go report, take action, fight it out. Nice. Jason, what is your investment advice for beginners?
What I tell people when they ask me is I tell them to sort of invest in Bitcoin first from a reputable exchange themselves. That's sort of the best way, like buy, sell, understand how crypto works from the perspective of Bitcoin itself, and not any of these altcoins. Even, maybe Ethereum if you want to diversify, but not, or if you want to diversify even further, you can look at some of the top 10. Now, granted, these aren't the top coins that will give you the highest return, but those are the coins that are less likely to go to zero, right? Like the coins that are more likely that will eventually go to zero are meme coins.
What are meme coins?
So it's literally a token that is created around a meme. So there'll be like these funny joke memes. People will create a token around that, and then people will buy it. So Andrew Tate, who's this crypto influencer, not a crypto influencer, this male influencer, he set up a token called Daddy, which became a multi-billion-dollar token within a short amount of time. And there's no value to it because there's no way you can spend the token. And so these things will go up and then they'll go down shortly thereafter, right? And so people that are looking for really quick gains, essentially casino-like gains, will go in there, and then if they're in there at the wrong time, which is mostly everybody, because only a small amount of people are going to get rich, and those are the guys that are already connected with the project, you're not likely to be that person. So there's a lot of people that come into crypto from meme coins and then get completely wrecked, and then don't want to get involved in it anymore.
So how will crypto ever get known for its advantages? It's just being like more and more famous for its disadvantages.
A really strong industry that's slowly been building through the bear market to make sure that what they have as actual utility, actual use case, business use case, and those people don't get a lot of attention, right? So I guess the impression of crypto is sort of unfairly maligned because there's a negativity bias, right?
So what should new people really expect?
When you're coming in, don't come in thinking, oh, I'm going to make a lot of money really quick. Like I know somebody who came to me and said, hey, if I put in $100, can I double it in 2 days? I'm like, no, you won't. Maybe if you take much riskier bets, you maybe could, but you could also lose it all. So, I mean, it depends. And so don't take the riskier bet, lose it all, and then be, oh, wait, crypto's bad. Well, you were greedy is what it really is, right? I mean, and so it comes down to greed is a really strong human emotion. And so people gravitate towards areas where they think they can make a quick buck. And crypto is not a place to make a quick buck. Crypto is a place to lose a lot of money unless you know what you're doing.
Wow. How does one even know that it's a meme coin and it doesn't have a utility? I mean, even if like one says that it's a meme coin, but how does one know that it really doesn't have a utility? Because it's all about marketing, and they market it so well that it looks like the next best thing. Anyway, so what about the launchpads and the decentralized exchanges? Do they have a role in sorting this out for let's say not an expert but a common man?
That's a good question. I mean, these things actually advertise themselves as meme coins. So it's pretty obvious to the people that are investing. They know that it's going to go down eventually. They just hope that they're in the earlier part of the bell curve where they're still catching it when it's going up. But there are other coins which are more difficult to figure out. And I guess what it is, that's actually what launchpads do, right? So what will happen is there's something known as a initial DEX offering. That's similar to an IPO, but for tokens on a DEX, that is a decentralized exchange. So you have these centralized exchanges, which is like most people are familiar with, WazirX, all these other exchanges, and then you have the more decentralized exchanges that like Uniswap, where anybody can come in there, put a token, and then see what happens. Now, the reason that evolved to that is because early in the industry, there were only a small number of centralized exchanges. And so there were like maybe 1 or 2 max in your region, forget your country. Like you'd be lucky if it was in your country. And so if you were setting up a token, you could only go on one of these 5 exchanges because that'd be the only market where your token would have a market, right? And then it became really difficult because there were a lot of tokens that were launching that would never hit an exchange because the exchanges were selective about the projects that they will list because obviously they're regulated exchanges. They have to make sure that everything's legit. And so they would only be able to list a small number of projects. So let's say you have 5 exchanges and let's say each of them lists 20 cryptocurrencies a month. You're only talking about a total of 100, like everywhere, right? So it was a massive problem. And so what decentralized exchanges came about is they said, okay, fine, we'll do no due diligence. We'll just let anybody invest. We'll just create the market and let anybody put in tokens and then let people buy and sell. So then what happened was people started doing these decentralized offerings, and a lot of them, turned out to not be so good because really anybody can do it, right? So a lot of people lost money. And so then they became this sort of middle layer for DEXs where it was known as a Launchpad. And a Launchpad oftentimes behaves as a due diligence layer for a DEX. So if a project is on a DEX, if you look at, hey, have they been on a Launchpad before? And if they've been on a prestigious Launchpad, then you can be reasonably certain that they're not, a scam project, because that Launchpad would have done some due diligence. And you can see Launchpad ratings too. So you can see, for example, the top 10 Launchpads by all-time high returns. So you can see their record of the projects that they've launched over the past several years and see what the returns of those projects are. So you say, okay, fine, if I invest through one of these top Launchpads, or in the same tokens that these Launchpads are launching, I'm likely to do really well because I can see the returns.
What is the Launchpad?
So what a Launchpad is essentially, it's like a private membership club. So you'll come in a lot of times, you'll buy the Launchpad's token, you'll stake it, and then you'll be able to invest in these companies before they hit the DEX.
Does any of the cryptocurrency have the same respect as, let's say, an American dollar? Respect, I mean, utility, acceptance. Does any of that have? It's stable, it's trusted?
And so generally speaking, USDT is a proxy for the US dollar in the cryptocurrency markets, because like I said, it costs a lot to move. So essentially USDT, $1 is always equal to 1 USDT. And it's known as a stable coin, right? So for example, Tether has a bank account where they have presumably real US dollars that back every virtual dollar that they issue. So that's kind of how that works.
So if Bitcoin is so stable, why do we need any other coin at all? In our entire country, as big as India, we have one currency, the rupee. All of America, and actually it's used world over, but it's one American dollar. So why do we need so many more currencies to do the trading on a chain?
Yeah, every coin has its own different use case, right? Bitcoin is unique in that it behaves very, 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 very much like digital gold, but there's other cryptocurrencies just represent value. So for example, any company can get their own token which represents their value. It's like a company going public. That would be similar to saying, well, we already have Microsoft, why do we need an Apple? Or we already have Microsoft, why do we need a Google? Or why do we need a Ford? Ford is a car company and Microsoft is a software company. Both of them are on the stock exchange, right? So while both of their value is traded on an exchange, they're not replacements for each other.
And what's the difference between currency and token?
So currency is just an exchange of value, right? It's a store of value and it's an exchange of value. A token can also be a store of value. It can also be used to exchange value. The difference is currency is generally fiat. Fiat is a Latin word for that essentially means, it's money because I say it's money, by fiat. So that government creates currency and says, okay, that's money. Now, cryptocurrency.
That's the same as our dollars or rupees.
Right, anything. Exactly. But that is the only weight that it has. It has the weight of the country that issues it, right? So the US dollar is backed by the full faith of the US government. Indian rupee is backed by the Indian government. But it's only obviously, it only means as much as the country itself, right? So things like wars can massively affect currency fluctuations and stuff. Whereas when you have a global currency, like cryptocurrency rather, like Bitcoin, maybe it's not been agreed as a legal tender in many countries, although it is in some countries. I believe in El Salvador, Bitcoin is legal tender. But although it's not globally accepted, the fact is that there's enough people worldwide that think that's valuable to where, let's say, for example, even if a large number of the holders were in Ukraine, when Russia invaded, it didn't really affect anything because there's holders of Bitcoin elsewhere, right? So, but if it was the Ukrainian whatever currency, that would have taken a massive hit, right? So, for example, US dollar would take a hit if it gets in a massive war. Whereas, because Bitcoin is decentralized, there's enough people around the world where, they don't really care whether one country has an issue. So I guess the difference is really, while they could both represent value and they both represent like exchange and value, I think some of them, some of them are obviously determined as money by fiat, and then others is more by choice. So people have chosen that to all agree that this particular thing has value.
Yeah, that's the same as a dollar or rupee. How much does it cost to launch a token?
You can't launch a token unless you have significant money. I mean, it costs in the order to do a decent token launch, just the launch itself is anywhere from $300,000 to $500,000. That's just the launch. That's not building the company around the launch or the administrative costs and stuff like that. So it can cost a lot of money.
What does this money go into?
You have marketing, you have development, for example. So you might be developing the product. You have just running a company. So for example, like having people that will post things, having people that will put out PR, all these things. And then of course the launch itself, like marketing is a big thing because the launch is actually a marketing event, right? So you'll be advertising in certain areas, you'll be advertising in other areas. You'll have to be on different launch exchanges. So there's exchange listing fees. Exchange listing fees can range anywhere from like $30,000, $50,000 to even $700,000. So the launch on KuCoin costs $700,000.
And apart from developing a token, the cost of development, what are the other important costs, other departments where a major high value cost component exists?
So there's companies that are market makers that their job is essentially to ensure that you have like a more stable token. So for example, they have a certain like pot of money and they'll buy the token guaranteed at a certain price. So for example, let's say you have a token and it's like you paid $3 for it and now it's on the exchange, right? Now let's say there's you want to sell it. You put it on the exchange, you say, hey, I want to sell it. Now there's nobody who wants to buy it for $3. Now, if there's nobody available who wants to buy it for $2.50, it'll keep dropping until it meets somebody that's willing to pay for it. So now your token you can have massive volatility on that token. So what market makers do is essentially they have a pot of money and they ensure that if somebody wants to sell the token, they will buy it and hold on to it for the next guy so that they can maintain the price. Some of the market makers are very aggressive. Some of them are very hands-off in terms of how they're just trying to make sure that they minimally affect the market.
As a tokenomic expert, of course, you would have gone through the initial promises of so many tokens. So which are the ones that you think have stuck around to their promises and have proven the utility that they once promised?
I invest in tokens that are more risky because I have a better risk tolerance and I have much more experience. But I would definitely say for people who are just starting to always just start with Bitcoin and to do it for at least a significant amount of time until they learn that they're comfortable before going to more exotic tokens and then maybe investing in the IDO market. So while we are in the IDO market, like as a Launchpad AdLunam, I don't suggest people start there, unless maybe they're my friends and I can tell them what to do. But I mean, the average person, I would suggest they start off with Bitcoin, then slowly move to altcoins, and then when their risk tolerance is higher, what I mean, what's generally said is you take, let's say you have $100, you say, okay, 33% I'm going to invest in highly risky assets in crypto, 33% I'm going to invest in somewhat safe, and then 33% I'm going to invest in, really safe assets. So that's sort of one way to do it.
Can you explain the concept of pre-sale in blockchain? It sounds very unique, but what is it?
There's two business models, right? I'll explain it this way. One business model is like the traditional business model where you go to investors and say, hey, I'm setting up this arcade. Can you give me some money so I can buy the place or rent the place and pay for everything, right? Another way is to say, okay, look, once the arcade opens, I am going to build this. You can trust me. You know me. This is essentially what crypto is. Like, you know me, I'm going to build this. But when I start the arcade, I'm going to sell each token for 100 rupees. If you buy it from me today, you can get it at 10. Okay, so now everybody that wants to play at an arcade and believes that this arcade is going to exist, right, will pre-buy these tokens from you, right? So now it's a way to raise money. So now instead of actually, going out and raising money from investors, you've pre-sold the actual utility of your business. Your business in this case is an arcade, and you pre-sold those tokens. So now those guys can come in. They only pay 10 rupees for that. But once they put it in there, the next person who buys it will be $1. So now you raise the money to by selling by pre-selling your utility. And now they could, of course, they paid 10 rupees for that. So they could also, if they wanted to, sell it to somebody else for like 20 rupees. And they don't have to buy it from you for $1, for let's say 100 rupees, right? So now there's also like a secondary market where people can actually trade that token between themselves because they pay less than the official face value. They're all different business plans. So you could have like an AI company, you could have any number of companies, as long as their value is being represented by a token they can then sell that token on an exchange, and people who believe in their business can then buy it. But they're all different tokens, and they're all representing their own business plan. So some of them might be completely worthless, representing the business that they're investing in, and some might be massively worth a lot, depending on, again, the business that they're representing.
What are decentralized apps? Some examples and some success stories to understand this better.
Yeah, so I mean, dApps are basically decentralized applications. Usually they're built on a chain. So the base layer is known as a chain. So you have layer zeros, layer ones, which are like the base chain. So like Bitcoin is a layer one, for example. And on top of that, if you were to build on that chain, that would be, like a layer two. So Polygon initially was built as a layer two on Ethereum. Then it became its own chain. So Polygon is both like a layer two and a layer one, if I'm not mistaken. And then on top of that, if you were to build a dApp, then that would be, like a layer three, for example. And so you're essentially building off of this chain. And it can be any number of things. So for example, a Launchpad is a dApp in that it takes in tokens. It's got a smart contract. The smart contract is hosted. And so you have dApps. There are multiple different kinds of dApps for each platform. Sometimes you'll have like an exchange for each chain, right? And each of them are dApps for that particular chain. And then you have sort of interoperable dApps. There are, I guess, in terms of use cases, like I said, Zot.io, they're doing some really interesting things in terms of putting real world assets on chain. I advised a company called FohoCoin, which is doing like fractional home ownership. They focus on Singapore and India.
How did you get started into this space?
One of the reasons that Smart Clock, which is my previous IoT company, was not able to really take off is because fundraising was a massive problem. And I realized that crypto was sort of a new way for companies to get funded, particularly companies that were able to express their value, or whatever value they were making, in the form of a token. And so if you were able to sort of extract that value, that you could pre-sell that token. And I thought that was really revolutionary, because I mean, small businesses for a long time have been in a position where they're not able to get bank funding. So, and if you're doing something particularly innovative, it's practically impossible. It's really, really, really difficult to get funding from external sources. I mean, this is a problem. If you're doing something innovative, let's say in India, or let's say in Goa or Bombay, or one of these smallish cities, versus the world. Like Bombay obviously is not a small city, but it's out of the norm for where general international investors invest. And so therefore you're stuck with local investors, and local investors are highly risk averse. And so they're not ones to go in and be like, okay, let's fund. People wonder why Google, Microsoft, and all didn't get founded here, but their CEOs are now Indian. And the reason that is because they couldn't be founded here, because nobody would bet on something like Microsoft or like Apple. They will maybe hire somebody to work with them once it's already successful, which is exactly how you end up with all these multinational companies that are run by a lot of people of Indian descent. The fact is, though, if you're a company trying to get funding in India or for any innovative project, or really anywhere around the world, like Venezuela, like Afghanistan for that matter, you're gonna come up against just a wall, because there's not going to be local investors for that. And so I think cryptocurrency sort of opens that up. for international investors and like basically makes it available for people that want to pursue something highly innovative where investors might be risk averse to sort of like have that risk divided by multiple people.
Imagine, why is this knowledge, which is of so many advantages, limited to just such few people? Why is that?
The fact is that that any new sort of asset class or any new sort of thing, especially if it's technological, right? It's going to take a long time for the average Joe to sort of understand and get into it. The other thing is that there's people that will exploit this, right? So there's people who will set up these fake exchanges, these fake cryptocurrency groups. I get randomly added to cryptocurrency groups on WhatsApp where they'll be like, put in some money here, and then this is when you buy and this is when you sell. And you'll notice that when you try to withdraw money from those platforms, you're not able to do it. They'll ask you for more money. It's a scam. And so a lot of people, when they want to get into cryptocurrency, instead of going to sort of reputable sources and researching it or whatever, they'll join one of these like get rich quick, WhatsApp groups. And really, it's not, you don't get rich quick in crypto. In fact, it's a very easy way to lose a lot of money. Like the easiest way to make $1 million in crypto is to start with $1 billion.
Okay. And what should be a founder's checklist for shortlisting his investor between, let's say, a regional investor, a known person or an institutional? When you're beginning, you have all these options, but actually none. So how do you know where to focus first? I mean, what are they looking for?
For a retail investor, what retail investors tend to do is they'll say, okay, who are the institutional investors in this project, right? So who are the advisors in this project? So you'll see that institutional investors tend to invest as a cabal. So you'll see like maybe 5 or 6, 7 institutional investors that all tend to invest in the same projects. And the reason is because they're a clique. For me, like I know when I'm investing in a project, like I'll know the other investors and the levers that they have to pull that they can make the company successful, right? So for example, if XYZ is an investor, he has a relationship with these 3 exchanges. And so I don't need to know from the project. I know that if this guy's an investor, there's a very high likelihood that they'll have these 3 exchanges that they can list on, even if they don't specify that to me, right? So it comes down to, so for that obviously is stuff you get from experience and being in the industry, which is why for retail investors, it's a good thing to look at who are the other investors in this project. Who are the other institutional investors? Like Master Ventures is really well known. Animoca Brands is really well known. So once these guys have invested, then you can, and they've launched on a decent launchpad, then you can feel pretty, and they're launching on a good exchange, not a DEX, not only a DEX. So sometimes they launch on a DEX and a centralized exchange. So they launch on a centralized exchange and a DEX, but they've previously, been invested in by a set of really well-known institutional investors, and they're on a good launchpad. Then you can be pretty good, sure that you're likely to make money.
And what are the good ways to identify and shortlist mentors and influencers in the crypto world for advice, mentorship, connections? Because finally, it's a LinkedIn profile or it's a Twitter profile, and is a decent fan following, a follow account there is a good signal to know that the person can be trusted?
Absolutely the opposite way for you to make that decision, right? Because you have no idea, for example, what relationship that investor has with the projects and with other people that are shilling that project, for example. And also, it's easy to fake followers. You don't take an individual's word for it. And there are individuals that I know of in the space that are considered influencers that will tell you straight up that their goal is to make money, and it's not to make you money, it's to make them money. And they're just letting you know that they're making money. So when they're investing in a project, they've already invested in it. You're what's known as exit liquidity. Exit liquidity is when you buy a token that they don't want anymore for a higher price than they paid. So their followers are actually their exit liquidity. That's how they get out of the tokens that they have. So it's absolutely not the way to. I'm not saying that there aren't influencers and investors that are sincere, but there are enough that are not, and there are enough that are trying to pump their own particular investments and ensuring that they're worth something. I know actual influencers that are talking about meme coins. One of the guys recently said, hey, one way to decide whether you want to invest in a project is if you find the meme funny. I mean, this is just madness from any sort of way to make investment decisions, but people are listening to them. So I think the way to do it is to really look at, because there are actually institutional investors. So what I mean by that is like actual VC firms that are really well known, that understand Web3, that invest in them. So if you see, Animoca Brands is a great example. I met Yatsu recently at an event in London. Yatsu, Animoca is legendary in terms of picking like really, really good winners, right? So if they've been invested in by Animoca, or let's say, Massive Ventures, or some of these top VCs that are in the space, because I'll tell you how it works, right? Unlike a traditional company, you have like an equity investment, right? So basically anything that's good for the company is good for the investors that are invested in that company. That's not true when it comes to crypto, because when it comes to crypto, you've created a token, and unless you've put the value in that token, the value can continue to accrue to the equity holders of the company, basically. So it depends on how you constructed that token in terms of like your white paper and how does the money go into that token? How does the value rather go into that token? So people who understand that, guys who do that are known as tokenomics experts. That's sort of like my area. My area is tokenomics. And it's basically understanding the token and what are the economics around that token, right? And once you understand the inputs and the outputs of that token, then you can make an informed decision of whether that's an investable token and whether the company is directing the value that's coming out of their company into that token, and it's not just a way for them to grow value in their own company and leave the token holders holding the bag that have invested, which has happened, by the way, to this company like Chingari. So a lot of the investors, the token investors in Chingari, are not very pleased with how Chingari has handled things, because they haven't really seen the gains that equity investors have. So again, it depends on how it's constructed, right? So guys that are institutional investors in Web3, they have tokenomics experts on staff. So they'll evaluate these businesses from the perspective, not of the company and all this like fancy stuff that they might put in, but where does the value come into the token and whether they think that token will be successful based on market conditions, based on valuations that they've seen like from hundreds of other projects. And once they invest in a company, that can give you a very good idea, because frankly, even if they was not such a great company, but they were invested in by like several really top-rate VCs, they will end up becoming a good company in all likelihood, unless their founder is really terrible, because they will have all the connections that they need to make quick partnerships. I mean, a good example in the traditional world is Y Combinator and Dropbox, right? So Y Combinator, Dropbox, when Dropbox joined Y Combinator, they weren't the only file storage solution. There were several others. But they were but because they joined Y Combinator had all these portfolio companies. All those portfolio companies ended up hiring Y Combinator for B2B file storage. And so now they have, all these very legitimate partners, and they can take off. And the same is true for Web3. So the way to look at it is to see who are the institutional investors, what launchpads that they're launching on, what exchanges they're launching on, not who are the individual promoters of the token.
As an investor, what are you most interested in? Like, what kind of investments are you interested in? And what about the other serious crypto investors? What are they looking for?
Yeah, I mean, so like I was saying, I invested a lot of projects before they even hit the IDO, before they even launch the tokens. So it's usually projects like a friend of mine just sent me a project to take a look at yesterday. So like after I get off this call, I'm going to go through it and like learn a bit about what they do and their team and stuff like that. I'll tell you off the top of my head, like when I saw the valuation on that company, it was at 80 million, which to me seems like a bit high, because if that company were for that company to do a 10x when they launch on an exchange, that means their company value would almost have to be at $1 billion. It's about 800 million. So it's going to be very, very difficult for that company to grow at that rate. And so like that's one of the things I look at. I look at the valuation, for example. I look at the team. I look at how many of the tokens are in circulation. So, for example, you want as minimum tokens out there as possible, because that way it's easier to control the liquidity. Because the more tokens that are out there that could potentially be sold, the less you have any control over the price, right? Because anybody can, so if like a whole bunch of people can dump the token simultaneously, and then you're dead. So I look at how much of the token is out. I look at how much the token might be to an individual investor. So I don't want like one individual investor to have like a massive amount of stake. I want it to be more broken up. And then I look at the institutional investors, like who are the other investors. This particular team that I'm looking at, for example, they've got founders from Bispilani, IIT, and stuff like that, which tells me like most of the team is actually Indian, obviously. But that also tells me something about, like, for example, Bispilani may be known in India, but it may not be known overseas. So they might still have a problem raising funds internationally. So these is like some of the things that I think about, and I also think about obviously the problem in the project. But believe it or not, like the project is probably one of the last things. I mean, obviously, if it's not there, if it's not good, then then the whole thing is gone. But it's one of the last things you look at, because if you've got a good enough team and they've got really good investors and they're launching on a good exchange, and they'll be funded enough and they'll probably be able to pivot to do something that's going to be massively successful for them, because they have all the support that they need. So it's really a question of like trusting the founder and their experience, coupled with the experience of their investors and the people that they have on board, to basically steer that in the right direction. It really matters kind of like, who the other investors are and who it is that's backing the project, because then you know kind of what levers that they have to pull to ensure that the project is successful.
You've been around the space from 2013. No one knew, no one that I know ever heard of blockchain back then. It was really, really long back. So what got you into it? And most importantly, what has made you stay here, considering that, it's so new, it's so dynamic? Is this something that you're chasing? What is it?
So I got into crypto around 2013. I was writing a series of articles. I was a columnist for Globe Asia magazine out of Indonesia. Came across Bitcoin, and I started writing a lot about Bitcoin. So I wrote, I think, 2 or 3 columns in quick succession for this monthly magazine. So it was like a lot of Bitcoin stuff in a very short amount of time. I think I paid $13 per Bitcoin. Now it's 67,000 last I checked. But yeah, it's been quite a ride.
And what made you launch AdLunam after so much of other experience?
I think I was already in the space when I was at IBC. Was launching a lot of companies. We didn't have a Launchpad, but essentially we were.
What's IBC?
There's a company called IBC, called International Blockchain Consulting. They're one of the oldest sort of blockchain consulting companies in the world, and so. Okay. At around 2021, I want to say, so basically they were like, they should do a lot of marketing, a lot of consultancy for these companies. They should charge them in fiat, right? And then they would, make them massively successful. And so those companies' tokens would be really, really, would be worth a lot. One good example is Realfeed. I think they blew up to like a $40, $50, $60 million company and stuff, right? So this is just through like, because as IBC, we had a lot of experience with like what are the levers you could pull to make a company successful, and who are the people that mattered, and so on. And so what IBC did around 2021 is they said, hey, we're making a lot of these companies successful, but we're not really partaking in the success because we're taking fiat as opposed to tokens. And so in 2021, they decided we're only going to take tokens for our work, which meant that essentially they were basically making investments in the companies that they were working with, right? Because they have to provide the services up front. They get tokens, and then ideally those tokens are worth money. And so in order to determine which companies were good fits, they needed somebody who understood tokenomics, who could actually like understand how these tokens were constructed, and whether providing them with quote unquote free marketing consultancy services, not free, but basically free until their token was launched and we would get some of that token. Whether that would be a good fit for our model, right? And so they brought me aboard to like evaluate these companies, and so that happened. Like I left the exchange, I was XRX, which I was at, And then I joined here to kind of IBC to kind of figure out which companies would be good fits in their portfolio. What would often happen is we take a company, accelerate it, then invest in it with our investment arm, then launch it, put it on an exchange, and then they'd be really successful. And so I was already in this space where we were working with these companies and then sort of getting them out there. And so when eventually NFT tech went public, and once it went public, we really had to stop investment because when you're a publicly listed company, less than 60% of the activities, there's a law, I don't know exactly the number, but less than 60% of the activities can be investment activities. So they can't be mostly investment because then you're just like a SPAC, right? So essentially we had to slow down, NFT tech had to slow down on investments massively and then focus on partnerships. And since my sort of focus was already investments, it made sense to me to sort of like take a sabbatical, which I did for quite a while. And then around that time, because I had worked with all these VCs all the time, and they were like, "Hey, when are you starting your next thing? When are you starting your next thing?" And so basically, AdLunam came about quite organically, mostly because there was just so much appetite for people to continued me doing what I was doing, basically. And so when we opened a raise for AdLunam, we raised like $1 million in 24 hours, and then raised the other $1 million within 5 days after that. So it was much faster than we expected.
Amazing. That speaks of a credibility. Wow. So guys, I am very, very excited to learn more and more about Web3 and blockchain. Judge me for that if you want to. But the promises and the approach of this technology is fascinating. So I like to close this conversation by repeating a line that Jason had said when I was asking him that why doesn't more people get to know about this space and what can make a difference. And he said, if a person somewhere in the world is building something really nice, quietly sitting down there and keep doing the work, that's not quite a story. Right? I hope you enjoyed this episode, and you can obviously reach out to Jason for anything that you may need help with. But do share this conversation, this podcast with someone who may like it, someone who may need it, and someone who may either be on the yes side of this conversation or a no side. I promise it will add perspectives to them. So thank you for listening up. I hope you enjoyed. Keep floating with a fish.